Yes guys, welcome to a brand new video. For today's video, I'll be discussing technical analysis in a nutshell. So let's get to it. So the pair I'll be using today will be Euro USD. And my first tip of the day will be know your time frame. So what do I mean by know your time frame? When we take a look at this descending type of structure, we can see there is a touch, there's a touch, there's a touch, there's a touch, and there's a touch. But between those touches, there are a lot of higher highs, higher lows, and higher lows. So when we have so many higher highs and higher lows being formed, within or between the touches, we know we are in the wrong time frame. So when we take a look at the same structure but from a weekly time frame, we can clearly see the low, the high, the low, the high, the low much more clearer, and we can identify this descending structure as a weekly pattern. Tip number 2 is know the direction. And what do I mean by knowing the direction? If we go and take a look at this pattern over here, first of all, we can clearly see this is a daily pattern because the touches are much clearer. And if we take a look on a 4-hour, you can see a lot of higher highs and lows and low highs and lower lows being formed. So that's why we classify this pattern as a daily pattern. Now, when we compare this pattern to this pattern, I think you can agree with me that this pattern is much more neutral than this. This is a ascending. This is sort of a ascending, but it's very neutral in direction. Now, once we have this type of neutral pattern, we tend to not have any comments, or we tend to have a zero bias in terms of the direction this pattern will break towards. That makes sense. So what I mean about that is we have an ascending pattern right over here, and we know by backtesting this type of pattern that we have a high probability of breaking to the downside. This pattern is much more neutral, so we don't have a bias towards a certain direction. And that's why tip number three is let the market show you the direction. So as you can see here on the daily, we have a clear impulse break of this structure. Now if we go in on a 4-hour time frame, obviously you can see substructures within this, and we could have traded this pair and this pattern within the pattern. Obviously the take profits will be within the pattern. With a structure like this, we can place a take profit outside just because we know that this pattern has a high probability of breaking to the downside. But because we have a zero bias towards this pattern, all our take profits will be within the pattern. Now getting back to tip number 3, let the market show you. The market showed us that it broke, and it also showed us on a 4-hour time frame that we broke our low. So this here is the formation of a new lower low. So obviously we broke. Now we are looking to short. And one thing that we will be waiting for when we want to short is obviously a small correction and a break of the correction. Now, the reason why we wait for a correction is we want the market to make a newly formed lower high. There's our last high. We want a lower high, just for added confidence that we are in a downtrending market. So if we take a look at how the market formed, so obviously you can see if I just connect the points there, high, connect them, the highs as well, and we go into our 1 hour time frame, and let's do a playback from the break. Okay, so tip number 4 will be, does the pattern make sense in the position it's currently in? Does it make sense that we get this type of correction, a continuation pattern after this impulsive break of this pattern? Yes, it makes complete sense that we'll be getting this type of correction after this type of move. So what will we be doing? Now we are in our 1 hour time frame, and just for a small tip, we use the weekly time frame for direction, the daily time frame for structure, the 4 hour time frame for substructure, and the 1 hour time frame for entry. So if we were to take the trade on the break like our plan says we can do, we would have put in our SL above this high, but we would, because we haven't formed any newer lows or higher lows or anything, we would have put in it above the previous high, which is here, and that's a 44 pip stop, so we would have put in it at 50. Obviously we didn't know that we will be reaching this level right over here, so the next best thing to aim for is the start of this pattern right around here. So it's a 1 to 1.5 around risk to reward, not that decent, but the main thing I want to show you is why we enter in this way. Now, for me, a downtrending market makes lower lows and lower highs. A uptrending market makes higher highs and higher lows. So if we entered here and price did something like this, moved up, and it broke this high. Obviously, if we take a look at the picture it is currently painting, and we think about the direction and the definition of a uptrending and downtrending market, this will be classified as the beginning of an uptrending market. So we would have closed the trade if we broke above this level of 1 spot 16 19.3. But if we were to break this low, this will be classified as a downtrending market, and we would have added confidence with our trade. So if we take a look at what happened next, there we broke the last low, and we are currently forming a new lower low, and that now can be classified as a new lower high. Obviously, when we reached 1%, we would have moved our stop loss to entry and made this trade risk free. But for tip number 5, it's a pretty simple tip, is listen to the market. Don't let your ego get in the way of understanding the bigger picture. So what do I mean about that? If we were to look at this right over here, we would have seen a low, we would have seen a higher high, and then we saw the break of this low. Now what does that tell you? We could be starting a downtrending phase. We broke the low and we formed a new lower high. Now with our strategy, we listen to the market and we understand the higher time frame move. We also have our little lower lows and lower highs within this substructure, but we understand the overall move on the higher time frame. So that's the 5 tips I have for today. Tip number one, know your time frame. Tip number two, the direction of the pattern. Tip number three, let the market show you. Tip number four, does this pattern make sense in the position it's in? And tip number five, listen to the market. Don't let your ego get in the way of consistency. And that's that for the video, guys. I truly hope you enjoyed the video. If you learned anything new, please feel free to share it with a friend. If you liked the video, I would really appreciate if you can drop us a like. And if you took anything away from this video, I would love to hear it in the comment section. So that's that from me. I really hope you have a wonderful day. Chat to you soon.